Come along, come along, come along. Let's go.
Yeah, welcome back to the YRJ podcast.
It feels like it's kind of been a while.
It has. You know that you're traveling around the world.
What can I do,
So that's why we're going to record
work and no
episodes.
play. Make Joe a what?
Makes Joe
a sharp guy.
a sharp guy. It's
So it's been a while. I mean, I've been away from my for our viewers. You notice that we kind of like slow things down. It was summer, right? So we decided to take summer break, just blow in some hair.
But I don't think we should leave. Let's not leave our viewers like this. Let's next time. Don't worry. We'll put in place structures.
You
So
ask
we
me
can
where I
have
travel to.
episodes.
You ask me where I travel to.
I don't think they care about their real estate journey, not your traveling experiences.
Okay, that's
but
fine,
I
that's
care.
fine.
So where did you travel to?
I traveled to. I had a boat cruise.
Nice.
Where? With my wife.
Okay.
To Miami.
Enjoyment.
And then from Miami went to the Caribbean.
Nice.
And then we came back, traveled to London.
Okay.
Again.
How many days were you on the cruise for?
8 days.
Okay.
7 nights, 8 days.
Beautiful.
And then we traveled to family reunion. It was pretty very fun. Family is everything.
So you've had an eventful summer.
Oh, absolutely. I'm
Amazing.
looking forward to the next one.
Awesome.
So I'm loaded, refreshed.
Yeah, you're fresh,
To
ready
refire.
to drop gems.
Absolutely.
On real estate. Awesome.
Absolutely.
Awesome. Yeah.
Okay, so thank you for joining us today. And we're going to be talking about something, very, very interesting. And it's just really to give more insight into how people can be very, very tactical in their real estate journey.
Or how a homeowner lost 200,000
I tried to go slow.
in real estate.
Like,
Give it to them. Let's real
so,
talk.
so we're going to be talking about, it's real talk, raw talk, and right? Actually, this is a very interesting story to me. Not so exciting,
Right.
but I think there's a lot for us to learn
Absolutely.
from this story. It's about how a homeowner lost about over 200,000,
Wow.
of
Cash?
of home value
Okay.
in their home value.
Okay.
And when I heard the story, and when the clients, we looked at all the documentation, spoke about it, and I'm like, I really can see how, why, the mistakes that happen. Now the question is it avoidable? Is it well calculated?
It should be. It's real estate.
Is it something you can predict? Because often people tell you the market is you can't really tell when things are going to go up, when things are going to go down.
Right.
Yes, you may not have a control over that, but there are certain things you have control of. Is the fact that did you do your fact check before you went into to buy property?
So tell us the story. What's the fact check the person could have done?
Okay, so as much as we tell people that real estate is the biggest thing anybody should buy,
Right.
or you can never lose out of real estate. There's never a bad time to buy. Whenever you buy, is a good time to buy. I kind of feel like as much as that is true, you could be very tactical
Right.
about when you buy. So when you buy, where you buy, and how you buy.
Okay.
So I think those 3 things, as a matter of fact, the first 2 things,
When and where.
is very, very important.
Okay.
So I think in this scenario, in this story, it was a function of timing. And I think, people can relate to this. I think it's really something happening right now in the market right now. People are home value, looking at what has happened, inflation, economy recession.
Home values have definitely
home value have dropped.
The conversation I'm having now, everybody that I have a real estate conversation with is saying, "Oh, houses are so cheap now. I feel like it's the right time to buy."
Right time to buy, right?
That's why I keep it.
Yeah.
But some other people still feel, you know what? We feel like rates might still go lower, so we'll just wait it out again.
Wait it out, yeah. And I think it's really so much about the timing. Like we always say, there's always going to be that 3 cycle: the buyer's market, the seller's market, the balance market.
Right.
The question is, when are you buying?
Right.
Now, it's something you can control. It's something you can avoid. For a starter, I'll probably say that let every man be fully persuaded. Number one, we're spiritual beings. Just to go that route.
Right.
Sometimes you can be led by the Spirit to give you insights. Number 2, you could work with professionals.
Like the Holy Spirit. Let's quantify that because
Exactly.
there are plenty of spirits.
Right, the Holy Spirit. Now, that's for us believers. Now, but you could also work with professionals
Right.
who could sit down with you and just do some due diligence in terms of do some research into what the economic outlook looks like, potential goods of the market. Is the market already at the peak?
Right.
Because sometimes you can always, just like the way you look at stocks, right? Look at what happened, I think yesterday. This guy already,
Jerome
Feds
Powell
said the market is
He said they might pause on future rate cuts,
Yeah.
and then the market just tanked.
Yeah, I mean, and it's even so much about the market tanked, right? Because basically his position was like, it feels like the market is overpriced, right? That would always happen,
Right.
and that is very strategic because for business owners, people need to come in, and if you're very familiar with the way the stock works, people buy when it's low, so people are already edged out right now because it's so
Right.
high, so
Right.
they need to do some, mathematical correction,
Right.
create some room, do their whole gymnastics. Some people come in, sell, blah blah. What? Let's get into those financial models. But for real estate, it's the fact that you need to know what's happening in the markets. What are the information? What does the economy say? What are the insight you can gather? Is the economy going to go higher? Is it like what we have right now? Right? It's a buyer's market. So when you buy, when did you buy? So in this case, I think the seller bought during what we call the seller's market.
So that would have been 2022/2023.
Yeah. Yeah. And even what is so pathetic about this is the fact that they bought a pre-construction. Yeah, I like that sound, right? And I know, for our viewers, most people want pre-construction. I mean, because it's a brand new house,
Right.
everything is new. Be very, very cautious.
And so can I just jump in if you don't mind? And it's not that pre-construction is bad.
No.
But it's that if you are buying in a seller's market and you are buying pre-construction, the issue with pre-construction is pre-construction projects are usually priced higher
And the actual value.
than properties that are already on the market.
Yeah.
Because what the builder is doing is they are saying, okay, you know what? If you can buy a 4-bedroom, 3-bathroom detached property in Whitby today at 1.2,
Yeah.
right? If a builder is building a similar sized detached property that's going to be ready, let's say in 2027, for instance, they won't price it at 1.2 because they're losing money.
Yeah.
Because that's today's value.
Yeah, today's value.
Because it's going to be completed in 2027, then they might price that detached property at 1.5.
Yeah.
So someone buying at 1.5 today, right? Now, once that time comes in 2027, when they are now trying to close, if the market has dipped as it has done now,
Right now, yeah.
then unfortunately, when the bank is valuing, they only value the property
current market.
at that current market value
Yeah.
price. So if prices have dropped like today, then the person has to come out of pocket. So I'm guessing
That's the situation.
That's the situation with that.
So the question is pre-com bad? No, it's not bad. But you need to be very tactical
right.
as to how you're buying your pre-con.
But there was no way that person could have known that prices would drop or interest rates would have gone up that high in 2022 to the point.
Yeah.
Like
so which is why I said most people don't work. So I'll give a good example.
Right.
Everything that drives the market is financial based.
Right.
It's economy driven.
Yeah.
Right. And I think this is the kind of service we offer people.
Yep.
Is the fact that we just don't sell houses.
Yeah. So there's a way you can know.
We just don't
come to
exactly.
YRJ.
We just don't sell. We just don't buy.
Right.
We look beyond the listed market data. We look into the economy data.
Right.
What is it? What is Bank of Canada saying? What's the Fed in US? What are they saying? What does the global market look like? Do your trend analysis. The past 5 years, the past 10 years of the economy. What has been the trend? So are we expecting growth in the economy? Are we expecting a decline in the economy? What's the global economy look like? What's happening, in the Middle East? Is there so much of war? So there's a lot of factors that drives what the economy could look
What's
like.
the interest rate outlook?
What's the interest outlook like? There's a
Right.
lot of, so for us, it's beyond, there's a lot of charts you have to plot to be very, very sure that, buying a pre-con now might not be good.
Or then at that time.
At that time, yeah,
Right.
because-
Because now buying the pre now is great.
Yeah, exactly. So I'm speaking,
Yeah, in the
retroactively,
past
right?
about you,
To
yeah.
say that buying a pre-con at that time, you're looking at the fact that, okay, it's probably going to close in 2 years.
Right.
What's the economy indices? What's it saying? Are we expecting more growth? Or there's a need for stability in the market?
Or what can you even do in case things don't pan
Thing
out
doesn't pan out.
as a form of risk mitigation?
Mitigation. Right. So for pre-con,
Right.
as a matter of fact, I like that. You need to have a risk mitigation because guess what? You're not working with the banks yet.
Basically reducing the risk
Reducing the
of
risk
you
of-
losing money or being in an uncomfortable situation.
Yeah. Yeah. So which is why I feel that the timing for pre-con is very, very critical.
Right.
Most times, most property that has that kind of problem is always pre-construction. Because now we have people that can't even close
Yeah.
because they bought probably like 3 years ago when the market was pretty very high. Now, like you said, market is kind
The
of
values have dropped.
Values have dropped.
Yeah.
The mortgage are going to look at what the current value is,
And you have to-
probably
and you have
be
to
at
close.
and you be at deficit,
Yeah.
right? So I had someone share their experience with me. They couldn't close. Now the bank had to take them. The mortgage broker took them to court because they can't close.
Mortgage broker or the
Yeah,
builder?
the builder rather.
Okay,
The
wow.
builder took them
Oh,
to
wow.
court because you have to close. Some builders are very
tough.
nice.
Yeah.
They kind of work it out with you. Look at how they could help you to structure things. But some, it's by the books.
Again, it also depends on how people basically. So that I think that's why advisory is key,
Advice is very, very key.
and I think that's a gap in the real estate space where buyers are not necessarily leveraging the expertise of people like us and other agents as well in the market. Because if you had reached out to a broker, and unfortunately maybe they did, I don't know what the situation was with that particular buyer, but maybe if they did, they could have gotten like, okay, these are the pros and cons, what are the things you need to watch out for at this point in time. I know sometimes, especially when it comes to pre-con, agents just say, oh yeah, you just assign it, not realizing that it's not that easy to assign
No.
a project.
But the person you want to assign to is also looking at the situation.
Exactly.
And it's like, I don't think this is a good one for me to.
And also with assignment sales, like this because you had a client recently that was sort of in that situation where if you're assigning a project, you can't put it on the MLS.
No.
I'm talking about your client that wanted to put it on the MLS.
Yeah.
Because the builder might still be selling that project, and so they don't want you competing with them where your thing is on the MLS and they're also on the MLS, and people are saying, oh, if I can buy this same 2-bedroom condo for this price, why will I buy from the builder?
From the builder, yeah.
And the builder might come after you legally. Yeah. So that's why. So assigning, when it comes to assigning properties, which means you bought it from a builder, now closing is coming like a year from now or 6 months or 3 months or whatever, and you don't want to close, so you want to give that contract that you have to somebody else. Now you have to look for somebody else to buy it, but that you have to go to like the public market, like on Facebook. Yeah. That's why you see assignments on Facebook Marketplace.
Absolutely, because it's
on
not
KJG.
It's not a monitored market.
Yeah, so you can't really put it on the MLS, which is our multiple listing service system. So it's not as straightforward, basically, is what I'm trying to say, right? And so also knowing that, don't think, if you're buying a pre-con, have it in mind that you want to close.
Yeah.
Just think of it that you're closing. If you don't close on it, that's fine. But let that, for every investment that you're making, you have to have at least 2 to 3 exit strategies. The first strategy is you're closing on it.
Yeah.
Second strategy is maybe you will assign it.
I mean, very clear. The documentation of assignments is very, very clear.
The clause of assignments is there. Number 3, you also want to make sure that maybe there's room for like an interim occupancy where
you can start getting rent.
You start getting rent payments on the property even before you close. So just have like 2 or 3 multiple strategies that you can implement.
Maybe you want to go over that so that our viewers can catch that for those that are taking notes.
Yeah, so I'm saying in terms of investing in real estate, you have to have 3 exit strategies, especially when you're buying pre-con. Number 1, it's closing on the property. That's you get a mortgage yourself, you qualify with a bank, and
everything checks well.
Everything checks well, then you move into the property. Number 2, you can assign it if you negotiated for an assignment clause on that pre-construction property. And number 3, try to negotiate for interim occupancy. Not every builder allows that, but if they give you, take it. Because that means even before the property closes officially, because you have 2 closings. On the interim occupancy, you can now put a tenant in the property where they are paying you rent, and you can use that money to be paying
your down payment,
the builder, right? And then before the property now closes officially, when it has an official address. So have multiple exit strategies here, not caught in a situation where you only have the option of assigning. What if you can't assign?
Yeah.
Then you're in trouble.
Yeah.
Or you only plan on closing, but God forbid you lost your job. How do you qualify for that property? So there's also that. But if that ever happens, think about, joint ventures. Maybe think of somebody, a family member that can buy with you. If the builder allows, I know some people are lenient enough. Builders allow you
to do that,
to apply for a mortgage with somebody else, and then you can now close on the property as well. And then you and that person figure it out, or you just give that person, put them on title, and then they're also shared owners with you of the property. So yeah,
and I think that's very insightful, which is why the advisory part of that service comes into play.
Absolutely,
just to look into the market insights, look into your peculiarity, right, and be able to draw inferences to be sure that this might be a very good time. Because the reality is that it might not even be a good time for pre-con. It could just be for you to just go for pre-sale.
Exactly.
At that time.
Which makes a lot of sense.
Right? Yeah.
It might be like, okay, it might not be a good time to buy pre-construction, but you can buy a property that is already built
in the market. Yeah, straight up. Because what that does for you is that you're closing right now.
Right.
Right. You're not front loading, the timing of your closing. So, I mean, no matter whatever happens economically, what's likely going to happen is the fact that you bought
right
at what the market rate is, right? and you're closing right now,
Sure.
and the bank is probably going to close for you based on what it is right now,
Right.
as against going for a pre-con and then 2 years down the line, the economy has, there's a change in the economy. Probably things have gone a little bit, to the downside, right? And then the bank is going to pre-approve you for what it is at that time.
Right.
That it would have lost. Like in this case now, even for that as well, I think my insight also is the fact that even for resale, right? There are times when you need that insight to be sure that, you know what, I probably want to wait for like 1 more year. Now I have a client who, been talking to, and for whatever reason, they just felt we sat together, look at the market, and the decision was like, you know what, I don't think it's a good time to buy. Because we could see that market was already, like, things were already very, very high.
But why can we dive deeper into that? Why didn't they think it was a good time to buy as at then?
So it wasn't just their inside alone, right? They wanted to buy, and it was going to be a townhouse.
Okay.
And it was pretty very, very high already. And my assumption is if a townhouse is going for 900,000 already, right? How far can it really go? I mean, not saying it's not going to go. It can keep grabbing because, again, what drives the market is not a function of the house, structure.
Type of house or whatever.
It's about the
right?
market,
And what the
demand and
market is
supply.
demanding, yeah.
It's what's available. It's about the economic growth, strength of the economy and things that are going to
People's incomes and everything.
immigration, so many things, availability and all those things, right? So it wasn't so much about the fact that it was a townhouse of the price. It was so much about the timing. Because there were indications already that the economy was already over bloated in terms of the strength of the economy.
Right.
And there were insights that what could likely happen is we might get into a recession.
Okay.
Right. So for me, it wasn't just based on the fact that I want to sell a property. It was the fact that there were very clear indications, both from the Bank of Canada, both from the market insights, and we're seeing that things are slowing down. For example, immigration is slowing down. Employment rates, unemployment is getting on the rise.
On the high side,
We could see all the numbers, and it's very clear that what could likely happen is the bank is going to start increasing rates. And once rate goes up, it's going to impact housing market.
House prices, yeah.
Right. So it was just as basic as that. I'm just giving you at the very base level.
Right.
However, in some situations, we might have to go deeper
Right.
where there's no insight. We're not very, very clear as to what the market looks like. And they start looking at 2 years from now. Are we going to, is the economy looking is there potential for strength in the economy? What are the government policies, saying? What's the global economy indices? Are there war everywhere? Are there drought? So there's a lot of, that's at the high level now.
Right.
But at the very base level, we could just see those information from the Bank of Canada, information from the Feds in America, because you and I know that whatever happens in America,
Kind of like impact us.
kind of impact
Yeah.
us. We could see what was happening with Donald Trump, the policy he was going to bring onto the market when it comes in. And we could see what that could mean economically across board, right? So you could see just at those very micro level, right? I mean macro level, because that's already high level, right?
Right.
We could see that there might be some shift in the market. And then we made a call to say, you know what, let's hold on. Let's see what things, we could see how many houses are available in the market.
As opposed to being the typical real estate agent who says, the best time to buy is now.
Right? Because for us is you would buy, but we want you to get the best value from whatever
Right.
you're buying. What last thing I want to see is what just happened. I'm buying and losing 200,000
Yeah.
straight up.
And just to be clear, it's not as if we have a crystal ball, but we just we give consultations and advisory based on the information we have available at the time, and give like an informed decision to say, okay, this is where you should go. And luckily, this panned out. And worked out for good.
I think it's more of look at what's happening even in the stock market, right? You see people use quant to do their pre-analysis,
Right.
which is what historical data of a particular business, how they've performed in the past 1 year, 2 years. Is there indication of growth? Like, for example, Alibaba, for example, I'm just giving an insight.
Okay.
Right? There were indications of, they were looking at the data to say, are they planning to grow? Is there more growth?
Right.
So this is what Quant does. Quant predicts, look into the business strategy, look into the potential growth of the business, and then they
Right.
could use that to analyze, say, okay, you know what, this might be a good time to buy the stock, or you want to hold, or you want to sell. So that's kind of similar to what happens in the market as well.
Right.
You could look into the economy indices, predict, and be like, you know what, looking at what we are seeing, is going to be a growth in the market. Looking at what we are seeing, the economy could slow down a little bit, and that will impact the market. So that's the kind of insights we kind of provide. But again, we could go deeper if it's not that crystal clear.
Right.
Things are pretty very good, and we'll tell you, you know what, I think it's a good time to buy.
Yeah.
It's a good time. I mean,
Because
we play safe and all that.
And just to echo some of what you just said now, it could also be that, you're buying We look into all the data, we see what's there, and we say, okay, you know what, you should buy. But as opposed to buying, assuming you qualify, after looking at your income, you qualify for $1 million. If you buy a property of 600,000, that's still being conservative.
Let's talk about the recent one we just had.
Yeah, that's basically a way of being conservative, because you can afford $1 million property,
but you don't have to.
Because you decided to buy something that's worth 750 or 600. So that way you still have the cash flow to do other things, and just in case something happens, you have that additional cash flow to still keep living your current lifestyle or even a better lifestyle. So that's a way of being conservative. So even though you bought in a high market, you were more conservative with the purchase price you were going for.
Yeah, I mean, to give an example, and to corroborate what you just said, think about what we just did recently. One of our clients, right. I think for me, I'm excited because I think we spoke about this yesterday. I said this client actually spent less than 50% of their income, and they got something very, very. I mean,
it's a beautiful property.
That's not beautiful.
Yeah, it's a beautiful.
That's awesome. Yeah. I wish I got that property myself.
It's a beautiful
right? To tell you how beautiful it is, right? Now that's because we could easily just say, you know what? Look at their income. I think these guys, they can afford 900, right? Because I'm thinking about myself. We're thinking about us. We just want to get a commission. And they'll gladly do that because even for them, they're still saving so much, looking at what they qualify for. But we're able to sit down together. I mean, a typical, I don't want to speak about that. Not all agents will do that. Right? We had a lot of negotiation, if you remember. Right? We were the one even pushing to say no. Clients were saying, we don't mind this amount.
I'll pay this amount, yeah.
And we are saying no. I know you don't mind, but I don't think we need to go this amount. And we had a lot of conversation back and forth. We did a lot of CMA, comparative analysis. We couldn't even find so much. You dug into so much of work, and we're able to say, you know what? I mean, you and I even had a lot of back and forth. You said, I don't agree. I don't think property is worth this amount.
Yeah.
I'm going 50K down. I'm like, no. I don't think it's that bad. I don't think it's that bad. Why? Because we also don't want them to lose that property.
Right.
Because again, what you don't want to client is about feel like
overplay your hand.
And then, part of the property sold and kind of like, but I could afford this amount.
Yeah,
Why don't you allow me buy it? Yeah. So we're able to create that relationship.
Right.
And you and I had to align, say, you know what, I think this is a fair value. And anyone could agree right now that is actually a fair value. And the beautiful fact that property is it's a multi-unit.
Yeah, so it has
because now it has a separate entrance, there's a basement,
right.
And I don't want to give the details.
They're getting income. Yeah.
These clients are getting real value.
We used to create another video about that, about how a client is paying $1,500 on a mortgage because that's what it looks like.
Maybe probably they might want to share the story themselves.
True.
And really just tell you how excited they are with that kind of experience. Now, the point we're trying to make is the fact that you can buy and buy well.
Yeah.
You can buy and don't have to lose out. And you will still buy. Like we always say, time to buy is now.
Yeah.
But not necessarily now. You might have to just wait a little bit and let the economy just reset itself.
Right.
And like what is happening right now.
Or position yourself.
Position yourself in a way. Or even if you have to buy, probably you have to buy a multi unit where you could, I think we'll talk about that.
Or buy pre-construction.
Yeah, at a good time, and just be able to. I think there's a lot of insights, and I wish, people really can do so much of, as realtors, we could get into a lot of financial insights to advise our clients and create more value for them.
So we have something exciting coming up, is what you're saying.
Yeah.
But let's not share.
No, not yet.
Something exciting.
Something exciting. Yeah. And I feel so sorry for the client, but I think we're going to try to see how we could help them.
But and the beauty of it is, sorry to cut you off, is that real estate is very forgiving. No, I'm being serious. I'll tell you why I'm saying so. Real estate is, and you mentioned this today when we were having a conversation earlier today. Real estate is forgiving in the sense that if you buy wrong, quote unquote wrong, right? At the peak of the market, like you said, you don't lose hope. It's just a matter of, think of it as you're getting your returns at a later time. So someone buys, this client bought well, happily for them. Now they're reaping the benefits today. But you bought 2022, 2023, and the interest rates went crazy. It just means maybe you have to wait. You have to live in that property for 5, 6, 7, 8 years. Because what happens is this, as we all know, life is in ebbs and flows. What goes up must surely come down. But in the same vein, what comes down must surely go up. Right? So it just means you have to just wait it out in that property. Wait it out. Again, still get advisory, get strategy, and think of, okay, what can you do? Now that you're in that situation, don't beat yourself up. It's not the end of the world. But what safeguards can you put in place not to make that mistake again? Or what can you leverage even in the situation you're in? That might mean you selling today.
Absolutely.
And just getting out of it. Or it might mean just waiting it out. Because if rates start to come down, which they already are doing at the moment, at least they've reduced it now by 25 basis points, right? So if it keeps coming down again and going into 2026, depending on what the whole tariff situation is and the whole macroeconomic situation is, who knows? Things might pick up again. So
I think if you want to get so much about, because we're going to be talking about strategy on the next episode. So if you want to really know, how the strategy works in terms of how you buy and in terms of how you could leverage, the markets, you want to stick to this podcast.
Or reach out to us.
Reach out to us. Yeah, reach out to us. I mean, we have our contact, on this button. Click the button, like and share, to friends and family just to get more insight into what's happening in the market. Okay? Yeah.
So
thank you so much. Join us on the next episode. It's still your YRJ podcast with Joe
and Nasser, where we help Canadians build wealth through real estate.
Thank you so much. Have a wonderful day. Bye.